actually it happened on the 40-day basis. Well, no. Absolutely, but you would never go short on the FLD for the cycle that you're trading. So I see you saying on the 40-day basis, assuming you're speaking about trading the 40-day cycle. You would never go short on the 40-day FLD. Okay, that's Hurst's trading methodology. I don't have time to go into tremendous length on it here, but let's just give a quick summary. Hurst's trading methodology is different when you're trading long and when you're trading short, first of all. But at its most basic level, what will tend to happen is that price crosses an FLD about halfway through the move. Okay, which means that the move is halfway over at least, and that is in a perfect. So let me show the 40-day cycle FLD. So the move, when price crosses the 40-day FLD, the move is half over. Okay, so you would never go short trading the 40-day cycle. You would never go short at the 40-day FLD because that move is already halfway over. Okay, so if that is the midpoint of that move, then you would expect price to come a little lower down, and it might still. However, that is affected by underlying trend and various other factors. But let me just say it again: you would never trade on the 40-day FLD because it's too late. Okay, you have to trade on shorter FLDs because shorter FLDs indicate that that peaks and troughs in shorter cycles have been formed, and troughs are always synchronized. Peaks are not always synchronized. They are, of course, occasionally synchronized, and so you always make trading decisions on the basis of shorter FLDs, shorter cycle FLDs, and you would have in this particular trading event, you would have at least gone short on the 20-day cycle. If you had decided to take a short trade at this level, at least you would have chosen the 20-day cycle FLD as an indication, because the 20-day cycle tells us that there has been a peak of the 20-day cycle. Now, let me zoom in here and show you one 40-day cycle. Yep, I think go through webinars, but I can make this point, I hope fairly quickly and simply. Here is the 40-day cycle which you are trading. Okay, bounced out of a trough and is coming down to another trough, very simply. Okay, when price crosses the 20-day FLD, it tells us that there has been a peak of the 20-day cycle. Now, the 40-day cycle breaks down into two. What did I say? Did I say 20? The 40-day cycle breaks down into two 20-day cycles. There they are. Okay. So last week when we did our trader chat, we had already almost certainly seen the trough, and I remember speaking about it. We had already seen the trough of the 20-day cycle, so we knew that the first 20-day cycle was over. We were already in our second 20-day cycle. The 20-day cycle was playing out. Now, if we received evidence that that 20-day cycle, that second 20-day cycle had already formed a peak, then we know that the market is, of course, heading down to the 40-day cycle trough. Okay, I hope that makes sense. Maybe you need to watch that back a few times. Let me say it one more time. If we receive evidence here, because we are already in the second 20-day cycle of our trading cycle, if we receive evidence that there has been a peak of that 20-day cycle, then we know that our 40-day cycle is heading down to its trough. Okay, so we would have entered at least at the 20-day cycle FLD, if not, in fact, at the 10-day cycle FLD. But I won't spend any more time speaking about that. But certainly, over the weekend, you might very well have set a stop entry based on that FLD, and you would have pretty much got in right at the open of the day. And made a bit of a profit. I know we did discuss last week actually trading short and decided that it wouldn't be a good idea because of the neutral underlying trend. So you probably would have stood aside. The easiest thing to do is to look back with retrospect and say, I could have made a huge amount of money. But you've got to stick to your rules, and our rules were we don't trade under neutral underlying trends. So in fact, we wouldn't have taken the trade anyway. But let me get to the conclusion, because I'm already over the 45 minutes that I'm meant to be spending on these trader chats. Let me get to the sort of grand conclusion that I wanted to draw for today's trader chat, which has to do with the relevant shapes, the 18-month cycle, and the 54-month cycle. There is the 54-month cycle on the Australian market, as we've discussed. Potentially an unfolding bearish cycle, potentially. More probably a mixed cycle. I don't expect that trough to go below 2009. Why? Because the American markets are presently describing a bullish 54-month cycle. So let's look at exactly that same time zone from early 2009 up until present day in the US markets. So I can switch to USSC's chart. Here it is. And if I change it to daily, here is that same, approximately the same time period. And let's have a look quickly at the shapes of these 18-month cycles and the shapes of the unfolding 54-month cycle. First of all, the 18-month cycles. The first 18-month cycle here, you can see, I haven't drawn that perfectly, but you can see it has a late peak and a much higher trough. Okay? Defines that as a bullish 18-month cycle, exactly the same as in the Australian market, although this is a more bullish 18-month cycle, okay, because it has a much later peak, but nevertheless it's still a bullish 18-month cycle. Let's have a look at the second 18-month cycle. The second 18-month cycle has a shape which does that. Okay, not as bullish, you will notice, not as bullish, but it is nevertheless bullish because it has a late peak and it has a higher trough. So it is still a bullish cycle shape. It's not strictly speaking a mixed cycle shape, but you could have been excused last year for saying, well, that's a pretty neutral shaped cycle, because it is fairly neutrally shaped. Yes, it's bullish, but it's only slightly bullish. Okay, the peak is only slightly after the midpoint, and the trough is only slightly above the trough in July of 2010. So it's not a very bullish cycle like the first one was. So it's a slightly mixed shape. The surprise in the American markets has been in the most recent 18-month cycle, which is the fact that these markets have jumped up and formed a new peak. Now, you can talk about whether it's a terribly dramatic new peak or only a slightly new peak. Was there a bit of fundamental interaction going on there? It's election year. There's lots of fundamental things happening to sort of affect things. So, but it is nevertheless a higher peak. So by the definition, by the strict definition of a cycle shape, this is the peak so far of the 54-month cycle, which makes this a fairly strongly bullish 54-month cycle. Okay. Now, of course, in the American markets, we're expecting exactly the same things we're expecting in the Australian markets. We're expecting price to fall into a 54-month cycle low early next year, or perhaps late this year. And if you were on yesterday's Trader Chat, if you weren't, I'd encourage you to watch a recording of it. We had an interesting discussion, contributions from some very experienced Sentient Trader users who pointed out that it was very likely that we would experience an early trough in the US markets for the 54-month cycle, probably before the end of this year, not into next year. But have a look at those recordings and see that. So here is the immediate first difference between the Australian markets and the US markets. The US markets are presenting a bullish 54-month cycle. The Australian markets are presenting potentially a bearish 54-month cycle, but more likely, because this is bullish in America, more likely a mixed cycle. Let's have a look at what's happening near term, just to finally map up this screen, and let's take a look at, I think I've got the correct analysis here. This is what I am still considering my alternate analysis, although in yesterday's Trader Chat we had some people whose cyclic opinion I respect tell me that they believe this is certainly the preferred analysis. And here you can see the big difference between this analysis and the Australian market analysis, and that is the positioning of the 20-week cycle. Let me draw a big arrow there so you can see the 20-week cycle on the 30th of January of this year. Okay, so that's the trough of the 20-week cycle. It's not a very impressive trough. And remember what I was saying earlier about when markets get into very sort of narrow ranges or wedges. That happened for a full 2 months in the American market. The cycles are still happening, and that's what makes cyclic analysis so challenging. The cycles are still there, and there is probably a 20-week cycle trough right in the middle of that, but it's very hard to see because of the fact that the Americans were just feeling nearly bullish. over that time period, and the markets weren't revealing their true cyclic nature. So according to this analysis, the 20-week the 20-week cycle occurred here at the end of January, which means that the 40-day cycle that we were looking at earlier in the Australian markets in early April is in fact an 80-day cycle according to this analysis. So what's happening in the American markets right now, and how does that differ from what's happening in the Australian markets? Well, we zoom in, of course, to have a greater look at the picture, and you'll see that what's happening in the American market now is that price has been describing a 40-day cycle exactly as it has in the Australian markets, but this 40-day cycle was a much more bullish shape in the Australian markets, or at least it was a cruel bearish shape in the American markets with a late peak over here. Okay, but nevertheless, price is coming down into a trough which is of at least 40-day magnitude. And again, there's a tremendous amount of similarity. If I count the bars from there, you'll see 29 bars have elapsed. Within the next 5 days, we're expecting the formation of a 4-day cycle trough in the Australian market. That same trough is going to form. It might be a day or two before or afterwards, but it's a trough of 1 cycle greater magnitude in Australia. That's the only difference, and that's something that often happens between world markets. The troughs form at the same time, but the magnitude of a trough in Australia is 80 days, whereas the magnitude of the trough in America is only 40 days. It's something that often happens, and so it's something to always bear in mind. So markets around the world are going to be forming troughs, I do believe, this week. Okay, in the American markets, they'll probably prove to be troughs of the 40-day cycle. In Australian markets, they'll prove to be troughs of the 80-day cycle. What's going to happen after that in the American markets? Well, there'll be a trough of 80-day magnitude, so a bit of a bounce up. Of course, there'll be a peak of the 40-day cycles, and then markets are going to head down towards the 40-day cycle, 40-week cycle trough, which is expected sometime in June, probably. Okay. Now, as I've mentioned, we're also expecting a trough of the 40-week cycle in the Australian markets. So, although the analyses differ, the bigger term picture in terms of what's happening in your market is very similar. Then, of course, after the 40-week cycle trough, the American markets are also going to bounce up, and they're going to head down towards their troughs of the 54-month cycle towards the end of this year or early 2013, exactly as is expected to happen in the Australian markets. There we go. I reached the punchline, which was to show you how there is an interesting divergence or difference playing out at the moment between the Australian markets and the US markets. The difference of the divergence does not indicate that any one analysis is wrong. In fact, it probably confirms the fact that both analyses are right. But it provides you with extra very important information when you are trading the cycles. If you know that the current 54-month cycle in the US is a bullish cycle, whereas in Australia it is an unfolding bearish cycle, likely to be a mixed cycle, it gives you very important information for making your trading decisions. Thank you very much for joining us today on Oz Trader Chat. Thank you for your interest in Sentient Trader. And thank you for your comments in the chat window. I do enjoy hearing what everybody has to say. And I look forward to seeing you next week on Oz Trader Chat, next week on Wednesday for Signals Chat. If you can join us, Signals Chat is a slightly less complex, in-depth look at Hurst cycles in the markets. And